Good evening. This is Ken Long from Tortoise Capital Management with a quick look at the market health check and some charts of interest for March 9th, 2011. An interesting situation developing in SPY in the market. We're looking at a market that's in bull volatile conditions, and it is compressed here into this very tight doji right on the 10-day moving average. You can see that we've had 4 days in a row of lower highs and 3 days in a row of higher lows. So we've got a very tight yellow zone around today's doji. Price is just above the 10, which is just above the 50, which is well above the 200. Interesting to me to note is the decline in market trendingness here from about 40 days ago when ADX peaked above 35 and has drifted all the way back down to about 16.54 with minus DI above plus DI. It's getting very close to the crucial 15 level on ADX, and we know that if it dips under 15 and then crosses back above 15, that's a sign of a potential early entry into a new trend. The market could go either direction from here. I mean, with oil prices and instability, and after a 60-day move of historic proportions in SPY, a move to the downside is not unbelievable. It has to get above 135 in my view to become the beginning of the next leg up, and then below 130 takes us into the next leg down, and then a normal correction in the bull would be a 10% pullback, and that takes us to 125. We're still well within the noise limit here, and so I think it's poised to go in either direction on a powerful move with volatility. I think that's what the volatility is telling us. I want to take a look at Microsoft. I think you have to love Microsoft right here. It's had about a 10 or 11% pullback from 29 down to 25 and 3/4. It's put in two white candle dojis in a row, sitting right on its 200-day moving average, two higher lows. Very tight range, max pain range compression. It can get to 2750 easily if the market moves hard to the upside, which it's poised to do. And the market can't move without Microsoft coming along, and if Microsoft leads the way, then the market will tag along. Very favorable reward to risk ratio on a simple test of the 50, and then if it gets through there, then it's back up to 29 and 28 and a quarter, and then 29 pretty quickly. Silver looks toppy to me. 3 days in a row, it hasn't been able to make a new high. It's held this 35 level pretty strong. But still, if it breaks below that, a retest back to 32 would be normal profit taking. So I am careful with my silver profits here. I don't even frame this on a swing trade basis. This is a pure intraday play to me. Oil looks to be about the same. 3 days, they haven't been able to make a new high. A little bit of weakness creeping in. If Libya crisis can't push this any higher, and look, the ADX is already up around 40. I don't think there's much risk of missing profits on the upside, as much as there is people that want to preserve their profits north of 41.5. It breaks through there. It gets back to 39.5, which would be a 50% retracement on this last move, and it would still be classified as bullish and more normally priced. The VIX, you can see how it kept declining all the way down through the bull quiet, now into the bull normal, and now at the edge of bull volatile. It's compressed into this little triangle formation here, very tight doji today, a breakout above 33 and it gets to 35 and then 37 pretty quickly, a breakdown below 31 and it gets to 28 in a hurry also. So the VIX is going to give us some intraday trading opportunities, and when it goes hard. Walmart is another one of these you have to love. It's the same pattern as Microsoft, but it's a day earlier in terms of already starting its breakout. Yesterday was a universal entry coming off this base, and it closed well, and today was just a continuation from yesterday's move, a directional candle while the market was sideways. If it gets through, continuation pattern through 53, gets it up to 54 in a hurry to test the 50-day, then 55, then 56.5, then 57.5. You have to buy Walmart if you're institutional money when you're on the favorable side of value, and now it's carefully or comfortably in between the 200 and the 50. There's still room now for third mouse or early mass adopters to start piling on. And again, just like Microsoft, the market can't go up without Microsoft tagging along, and Walmart's big enough that it could actually drag it higher as well. Exxon Mobil fired on a bunch of different patterns for us. It was a 551W. It was a triple screen. It was a channeling pattern. You can see it's above its 200-day moving average, like all the energies, and it came down to minus 80 on Williams percent R into a nice, tidy, tight little doji, holding support at about 83 3/4. You can get into this at about 84.5, and then 87, then 88 are both well within range. Especially if we see oil break out to the upside, then Exxon Mobil is going to take off. That should be on your short list as well. Finally, Alcoa, just a little variety in here, one of my trading favorites. I've framed this as a swing trade, so I'm not tight up into the bottom of this doji. It didn't close particularly strongly today. If I'm trading this intraday, I'm going to be much tighter stop. I would be somewhere more up right underneath the 16 1/4. But on a swing trade, you can see 16 has held significant support for a while. Mechanical entry at 16 60 roughly. Targets at 17 17.5. I'm prepared to trade Alcoa inside the yellow zone on tactical momentum with a tighter stop, and then that gives you a 2-to-1 just at 17. So, lots of opportunities tomorrow. Keep your powder dry and your risk managed. This is Ken Long from Tortoise Capital. See you on the high ground.